Let's get into it right now. As always, starting off with Bitcoin, and the topic of the day is of course, is this the bounce that you're looking for? So when we're talking about is this the bounce that you're looking for, of course, we're referencing the bounce that we got in the last 24 hours from about $33,000 low all the way back up to just over $37,000 high. And does that actually matter for overall price action? Has anything actually changed? And is this like the bottom? Is what I imagine a lot of people are kind of looking at right now. Well, there's a lot to say about this, of course, and I want to first dial in the situation that we're dealing with. So today is Tuesday, the 25th of January. Tomorrow it's Wednesday, the 26th. There's a big FOMC meeting, Jay Powell's going to be speaking, which is going to very likely be a big deal. As anytime that he does get on the on the microphone, markets move both to the upside and the downside. Typically to the upside, however, traditionally speaking. Although in the past month and a half now, been a lot more downside action after several years of just straight up whenever he gets on the good old horn. So what does that mean for price action right here, and how does that kind of fit into the overall narrative that we're looking at? Well, it would be essentially this. So we were looking at this range from yesterday, about 37,000 to the upside versus about I think it was 34,000 to the downside. We broke the downside of the range. That did initiate our test down to the gap from CME at about 32,500 to 33,000 bucks. We got that. We got the bounce there that we were looking for after the first move down that we were looking for as well. I'm not saying this to toot my own horn, but so that you can kind of follow up on these things in the short-term time frames and see how they kind of work out in reality, I suppose, as this was a rather bang play right there. And now where are we? Well, we haven't really changed, actually. We haven't really seen anything different go on this from even a medium-term time frame perspective. And what would actually resolve that in a medium-term time frame perspective? Need to see a closure above about 37,000 bucks, technically a little bit above there, be about 37 and some odd change on preferably a 4-hour closure. As you can see, the 4 hours getting incredibly well right here. And the problem with this price action is for the short term, referencing the title of is this bounce that you're actually looking for, this is already looking, a little bit on the weaker side. And here's the thing, I really wouldn't expect any resolution in this case to the upside before tomorrow's conference. Of course, I can be wrong about that. What would be the criteria to invalidate that and target back up towards, 39,000 to maybe even 40,000 bucks would be, of course, the same thing as yesterday. 4-hour closure above about 37,000 bucks. You can maybe even could even use a little bit lower than that, but ultimately 37,000 bucks going to be a nice way of kind of identifying that. Anyways, for the time being right now, we do have potential hidden bearish divergence building up on the 4-hour time frame right here between this point on this high that you saw coming in all the way back on over from about 39,000 bucks and the high that you would presumably be putting in right here as well. On top of that, we do see extremes have been hit on BBWP on the 4-hour. So, we're likely going to go into a more prolonged contraction phase, which likely aligns with a range being constructed between about 37 highs and about the lows of yesterday on a closing basis, which is about 33.5, somewhere around there. Anyways, on top of that, I do want to address this here as well. So on 4-hour stochastic momentum, we actually did see it break what would have been the trend line coming in and governing the last few highs coming in all the way back from January 12th, which is important, which is good. But overall, we do see that this is still heading up and still will very likely head up as long as we're closing above 34,000 bucks. By the way, I just put up the promo video for this indicator, that being the advanced stochastic. It is available in the CrownChain application. Should let you know that because I got a shit ton of questions about that and probably lessen up some of the emails that we get. So thank God for that. Anyways, in this case right here, we're seeing this really travel up a far amount whilst price action has not actually broken above even the medium-term time frame, or in this, yes, this would be medium-term time frame high. I was about to say short-term time frame high as well. No, that's not necessarily true. Short-term time frames have actually been, discombobulated here quite a fair bit, but $37,000. So I would look for essentially over this next 24-hour period until we get that economic event with Jay Powell speaking for likely a range between these regions. And seeing as we just tested the range highs, probably going to come down and test around the range lows. I would not necessarily call full-on continuation in this case, because again, we have hit some pretty major and macro areas actually, that one of them being, of course, the CME gap coming in from the bear trap that we saw way back on over here in July. You can see that has been an official wick to wick in this case, which is kind of the way, or not kind of the way, that is the way that I identify a gap fully filled. And we actually did see a nice closure on a hammer dildo right here on volume for CME. So traditionally speaking, at least least that's going to provide a bit of a range, but that doesn't mean that Bitcoin can't come back down and test somewhere around the range lows. I don't really have a target for that, nor do I have, a number in mind for right now, but I would say that I wouldn't necessarily be looking for new lows until Bitcoin closes another hourly dildo, let's say below about 33,800, 33,700. If something like that happens, at very least, we're going to test yesterday's low officially, which is not too helpful because it's just $1,000 lower. But at that point, I probably would be looking for Bitcoin to play out the full measured move that we did see. I think it was from this chart over here. Yeah, from this chart over here, based off of the head and shoulders formation, which is pointed down towards about $30,000 or so, which I do think would be a natural and very, very big base for Bitcoin, which I'm not necessarily convinced that Bitcoin tests like from this exact moment right here. I do think, personally speaking, coming off of the back of tomorrow's event, we'll probably see something more or less representing a range today, something like this, maybe pops back up tomorrow's event, rallies up somewhere around 39 to 40,000 bucks. And then if you see another lower high right there, well, probably more of the same with at least another test back down somewhere around the top side of this blue box territory, which is of course the summer base and the January base as well from last year, actually a very, very big one with humongous volume on it as well. I'm sure that the volume profile is going to show some pretty intense activity within that region. Actually, in fact, the point of control is interestingly enough at around $47,000. That would actually imply that above $47,000 to $48,000 actually do start to get quite bullish on Bitcoin again. I would say that correction is over. It also would be, of course, your break above the major meltdown area that we did see about a month ago, almost a month ago now, actually. But for right now, this would be the next sort of area to be aware of. Anyways, let's go through lower term time frame momentum oscillators and just see if they're all kind of on the same side or suggesting the same picture as a 4 hours. I haven't really done that just yet. 3 hour right here is going to be doing what? Is going to be loading, actually, is what we're seeing. Yeah, 3 hour is already getting way up there. Will turn down below about 35,350. Again, this is starting to be a little bit more of a bearish reset for right now, in my opinion, at least for another short term try somewhere around the range lows. Buy hourly is showing what? Is showing down already below about 37,000 bucks. So that would be the range highs here. And hourly is going to be, I'm going to guess, down as well, as long as we're below about 36,750 or so. So let's start to match that up with the medium and higher term timeframes. 12 hour is obviously going to be popping up above 34,200 or so. So again, short term, on the medium term timeframes, I don't think that Bitcoin's going to have the momentum to actually break down and really shatter our current lows. At least just yet, if it's going to happen at all. 6 hour is also kind of traveling up above 33,600. I do want to reference that as that one's been pretty damn good recently. And daily is also going to be coming down here as long as we're below about 35,800. So this is still essentially winding up, at least in my opinion, for a greater bounce, probably in the next week to come, week to week and a half to come. But I don't think that we're there just yet. Again, if you're looking for a verifiable, an easier way of just doing this, I mean, it's basically the same thing as yesterday, right? 4 hour closure above 37,000 bucks. If you're using an hourly, I'd be using just a little bit above there, like 250 or so would be good enough for me. And then yes, I would be looking for, let me just get rid of the volume profile right here, although it does actually have natural confluence with the $39,000 region that I'd be looking at. Where is it? There we go. I'd be looking, hey, damn, wrong chart right there. I'd be looking at this area right here. Keep in mind, however, there's still really no talks of any major macro reversal on Bitcoin anytime soon. That would be most easily had above about 47,500 to $48,000 as we referenced earlier. But even then, Bitcoin still has lower highs here as long as we're below about $44,000. So that is the next sort of major line in the sand. And for right now, you'll notice if I get rid of my damn LARP lines over here, apologies on that, we can actually reference that in a second, but it is not relevant to the current conversation. And let me just get rid of this as well so you can very easily see it. Oh, geez, they're everywhere. They're everywhere, man. They're fucking multiplying. But basically, the 382 is right around that $40,000 precipice. So that would be sort of the major area to be aware of on a daily time frame, that as long as we're below, there's no real talks about any major moves to the upside. Obviously, there's no talks about even a potential reversal here for the long term, as long as Bitcoin's below about 40,000 bucks. Personally speaking, I do think that the 618 is the most important region to be aware of for a long-term macro reversal, implying that Bitcoin above there on a daily closing basis. I am, going to switch up to be very likely full on bullish. Of course, there's going to be ebbs and flows, but I'd naturally be a little bit more in a bullish posturing. Why is that? Well, the reason why that is because this would be your proverbial bull trappy region on the next rally attempt, which this asset really hasn't had like a major rally attempt. When I say like a major rally attempt, I mean, this has just basically been straight down this whole fucking way here. We really haven't seen anything like more prolonged like this, right? Well, that would be my major area for a traditional bull trap between about 44,000 bucks and 0.5 right here, which is also that last last lower high, and then about the 618 right here, which is about 48,000, also in line with the volume profile point of control as well. Anywhere between that region would be your proverbial bull trappy region on a daily. Obviously on a weekly, that would just be your next lower high, and with your next lower high on a weekly, seeing as you already have a lower low right here, well, that would presumably be the nail in the coffin for a while on this asset for looking for much lower prices. I also want to reference traditional markets as well. Let's go over here to NASDAQ. I don't think that I went over this yesterday, or if I did, if I maybe I did, I forget. Anyways, NASDAQ right here, again, phenomenal bounce yesterday on volume as well. Same sort of thing right here on the short-term timeframes, a little bit on the weaker side, yes, so probably does, maybe test around the lows, but I don't think that we're going to be going lower first before playing out a bit of a better bounce, probably coming out off of the back of Wednesday's event. So how is this going to work from an event perspective? Well, the expectation right now is that there's going to be about 4 rate hikes in the year of 2022, and the Fed's going to taper, ending, I think, at basically around the end of Q2, if memory serves me correctly. Either which way, if there's any sort of indication tomorrow, any sort of indication at all that the Fed is not going to raise rates at least 4 times, then the markets very likely will rally, and they'll very likely rally hard. I would imagine Bitcoin gets somewhere between about $39,000 to $40,000 rather easily, and NASDAQ probably, reclaims back around like somewhere around 50,000, or sorry, not 50, but 15-ish region overall. You can see on the weekly right here, it is starting to hang on, and if we do put on our actual major moving averages, that'd be the 55 as well, which is kind of a sticky area traditionally speaking, just by the nature of people typically, closing their shorts there, assuming that they were short into it, and for people, looking to buy BTFD, I suppose that would be a relevant region as well. Anyways, let me get into this over here and reference this data as it is still of the utmost importance, that being the global open interest, of course. I still want to be on the record as saying that I am generally going to be cautious as long as we do see this, basically not coming down to the same macro regions that we've seen before. It doesn't need to be exactly down to what we saw over the summer, of course. This is a slightly different market right here in terms of participants, as we do have but Bitcoin has a futures-based ETF, so naturally speaking, we should expect the open interest to have a higher base over time, but I do think that it could come down somewhere between about your September lows right here at about $8.5 billion, and these lows over here at about $5.25 billion. The lower, the better, essentially. And by the way, I should let you know, on the Crown Trading application, you can actually set an alert for this, which I'll do right now, and I can show you exactly how it goes. So here we go. Where is my damn open interest? There we go. I want to see when it's under, and I want to see when it's under first 8 point. I'm gonna do it a little bit higher than what I actually do want to see, maybe 8.6 billion. So I'm gonna save that. I'm going to get rid of this as it's triggered. It's been triggered. And then I also want to know when it gets below about 6.5 billion as well. These are going to start to be major regions. And yeah, you can do this all for free on the Crown Trading application, which is amazing because I massively appreciate using this. So fair enough. Anyways, there we go. All right, sweet. So let's see, what else did I want to reference over here? Yeah, let's go down to the hourly data for this feed. You can see that it's come down, a little bit below 10 billion or so, but still, we saw a slight uptick yesterday actually on the bounce. So again, people are using leverage to buy the bounce, it does look like. And when we go over here to the leverage ratio, it's still incredibly high. Now, again, we do expect this to be higher. Professionals, which have been, entering more and more at in size into this market, are going to be using futures contracts or derivative contracts to essentially cover their positions, which is not real risk. But I would still be looking for the open interest to come down in order to denote a major and potentially macro low, because that's going to represent the uncovering of those positions. And when they uncover those positions, it does mean that they're going to have some upside exposure yet again. So until that, no matter which way I cut it, as when I think about it more deeply, it still does matter actually, because I was having a good conversation with one of my good friends, Mr. Coop, the other day. And he was kind of providing some a little bit of pushback on what I've been saying in this regard. And it's like, yes, that does make sense, but at the same time, it would have the same actual result. In fact, as we'd expect open interest to come down alongside a letting go of those downside covers, assuming that, that is a big portion of the open interest to begin with. I imagine that most retailers are already absolutely fucking crushed out of this market, to be fair. Fear and greed index is also at a 13 right now, which is, Jesus Christ, man, quite nasty healthy indeed. I just want to make sure that I'm getting everything else over here. So let's go back. Oh yeah, let's go check out Dixie. I have not checked out this one today, but yeah, okay, okay, so we came into this week, right? We came into this week looking at this region at $95.50 as the hopium region, essentially, presenting something like this, that's saying, hey, if you want a little bit of hopium, this is what you're looking for to open up into Monday. We got the exact opposite of that, and it's going to fall into the general narrative of this in the sense that, yeah, this is a continuation play right here. Very likely still looking for continuation all the way up to 98-ish, maybe even all the way up to 100 in the next half year to a year or so. Of course, this is not a direct relationship to Bitcoin. This is the dollar's value relative to a basket of fiat currencies, but on the macro scale, when you are looking at general direction here, has been good enough in getting the macro direction opposite of Bitcoin and most assets as well, to be fair. So I still remain bullish on this one, and I do expect that it does have higher to go over the next half year to a year or so, and then we'll come back to it after that. Anyways, okay, so we got that. Let me just reference this over here as well. I also want to bring up this data as well here. So again, we did hit a pretty big area yesterday, that being the CME gap, also just low $30,000 territory, which was a humongous base for pretty much the all of 2021. And then also we do see the 20 simple on the monthly coming in here as well as I believe actually we're on the quarterly 9, which should probably naturally line up with this. I just want to double check on this just to verify for myself. Yeah, we hit exactly to the 9 exponential on the quarterly right here, and also the backfill in the last quarterly open. So all of these things, are going to be aligning for a bounce, as we did say, coming into, I think it was the end of last week. But when we're talking about these major macro areas, you don't expect the resolution of those, like the result of the bounce, immediately. When you're talking about a monthly or quarterly, especially, you're probably talking about like a week or two of price action to look at that response. So I want to follow up on that now, because you've seen that in real time, or well, presumably real time, as much as you can right here. And yeah, it takes a bit of patience. So, blindly buying that first move down, usually not going to be the best idea from a opportunity cost perspective, unless you're more of like a short-term scalper, of which that's kind of my game right now. And that can be massively profitable, also massively, well, I won't finish that sentence. Anyways, I want to get into this as well right here, right? Okay, so I reference this as kind of like a worst case scenario right now. I do think it's relevant to talk about nowadays, just because, well, it's relevant. I mean, we're close to the resolution of it, although I'm not necessarily convinced that it does happen, although we do have, a good amount of history here where it does happen, to be fair. Anyways, we do see that the monthly MACD is going to be crossing down, assuming that Bitcoin does close the month below 54,100. Not only will monthly MACD be crossing to the downside, but we will also see monthly stochastic momentum cross to the downside as well, below 53,500 essentially, and we'll be kicked out of the bullish control zone for the first time since like April 2018. In fact, which is not great history. On top of that, we do see that the monthly PMAR is also losing the moving average on it, which has happened once and twice before in the history of Bitcoin, and those were correlated with those MACD cross downs. One of them being right here in May 2018. The next one being right here. Actually, I don't even have it written out, but it would be right here. In fact, it would be right there. Anyways, that would be this one right here, right before the good old, or maybe not the good old, but the old flu dump, of course, about a month before actually. And then we're getting the same thing over here as well. And while we don't have the PMAR cross going in back from the August 2014 bull trap, we do have a monthly MACD cross. So it does have a pretty good history of that. And technically speaking, anytime that we have actually seen that over the next year or so, price action has moved down to the green 55 on the monthly, that is. So naturally, this will be rising up and over time, but that is currently at about 22,000, just above 22,000 bucks. So I do think that max downside for Bitcoin in like the worst case scenario or so, probably gonna be somewhere around $23,000 to $25,000 if I had to guess. That is worst case scenario, at least in my opinion, for right now. And that will only be initiated if Bitcoin does close below our current lows of the summer range, which is, I think on a wick basis, was what? 36, sorry, no, that's not correct. Hold on. It is about 29,641. Until then, Until then, it's just not relevant for me. We do have this measure move down here, which we're very, very close to. So maybe one more washout on a fuck you move, and then the big bounce that I think a lot of people are waiting for. But I do still think that this is going to take a little bit of patience right here, to be quite honest with you. So hopefully that was helpful in this analysis. I'll be shutting that one off for right now. Oh, before I shut it off, I should let you know, as always, there's a bunch of scammers on Instagram. I am not that person who is messaging you in the DMs. I do not have secret funds that I'm looking to trade for people. Sorry, I'm not doing that. So please understand that if it's not coming from the account that is linked in the description below, it is certainly not me. It's probably a scammer, and the reason why I tell you that is because it's probably going to just take your money and run. It's probably what's going to happen. I haven't tried it myself, so I can't verify. I can't validate that statement, but I'm gonna guess. Here. And then also, what else? We got the Jewel Light still free until about February. You can try it out in the link description below. Got my old Bybit show. I haven't done that in a while. There you go. Go get wrecked on Bybit. It's fucking great. Just lose all your money right there. It's the perfect market to do it. No, as always, man. Look, they are offering up a $3,000 deposit bonus, but please understand that, look, the reason why they're doing that is because they know that they're probably going to make more money off of you than you are going to make off of them, which actually shouldn't be a predatory relationship, because the way that they make money is from people putting in market orders, which, you can put in a market order and still, make a good trade, right? But most people are probably not going to be profitable leverage trading, not because they're not capable of it, but because they probably haven't put in the time and effort to be capable of it, which, is going to require, well, a lot of time. I mean, for myself, it's like a year and a half, 2 years. It's a long time, man. And I was quite lucky in my disposition, having some tutelage from some of the best traders, at least in my opinion, in the world. And even then it took me a long time, but I'm also a slow learner. For the people out there who are, of course, already a validated trader, someone who consistently makes money, yeah, might as well take advantage of a deposit bonus, I suppose. I mean, it is free money in your case, but for the people who are not, it's just really not wise, man. Look, it's unless you've really put in the effort, or unless if you actually backtest whatever strategy that you're working on, and you have the statistics to validate that it's actually going to work, then it's probably not a good idea. I'm not trying to be your dad. I know that a statement like that can have the opposite effect because people want to go against it, but it's really, 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 really unwise. And I can tell you from experience, going broke is not there. There's really nothing pleasurable about it, to be honest with you. Anyways, hopefully that was helpful. There you go for Bitcoin.